ladies and gentlemen, it has happened. Mr. Kamath's arrival has coincided with the Vikram lander landing on the surface of the moon. It is history that has been created. For the very first time, a country has achieved what the team at ISRO has achieved. Yes, we can do better. We can give the team at ISRO a standing ovation, a round of applause. The Prime Minister is speaking at this point in time, is what I can inform you. But what a moment for the team at ISRO. Specifically after what had happened the last time around, I would imagine that there is collective sense of relief and, of course, extraordinary happiness in the minds and hearts of every single Indian. And I'm sure across the world as well, people cheering on the achievement. And, of course, what a moment it is. Mr. Kamath, you know, what a perfect start to this conversation, sir. Truly a moonshot moment for India.
Indeed.
Your first reaction to what you're experiencing as we see these images?
I first looked at the number, $75 million. This is an impossible number. So it's almost like free mein kya milta hai. Chand mil gaya. I think it is not easy. Not easy at all, and congratulations to
It is a testament to the frugal engineering that ISRO has come to be known for, and you're absolutely right, $75 million and actually taking the lander to the surface of the moon, a feat never achieved before.
Indeed.
So, Mr. Kamath, if we were to then talk about what this means as a moment for India, and at this point in time, I know that you continue to be extremely bullish about the strength of the Indian economy, the role and relevance of the Indian economy in the global order, and those images now playing out on our screens right behind us as well, so we can enjoy both moments at the same time. You know, you've often spoken about the fact that you're confident that India will be able to double its GDP over the next 9 to 10 years. Just in light of what we've seen happen in the past year itself, what are you most bullish on?
Yeah, I think several factors which makes one bullish. I look at two data points which are really beyond my conceptualization, I would say. One was the consumption of data. What has happened in the last 5 years. 5 years back, I could not have looked at the Indian data scenario and said that we would be the largest consumers of data in the world and be at the lowest price point. That's one. Second, even 4 years back, I would not have dared to say that we will have the largest number of daily digital transactions in our country, of any country. And you know, there are large countries our size there who were ahead of us on both metrics, and we could actually take a step beyond, as it were. I think that, to me, adds to several other things that are building up. That is, start at the basics, the balance sheets.
Yeah.
The balance sheets of corporate India, balance sheets of the bank, financial sector India. Last 3-4 years, the sort of cleanup that has happened. And the ability of corporate India to fund itself. Not necessarily come to the banks. And when I started my career, 4.5:1 was the total leverage. Long-term debt, working capital debt to equity or net worth was 4.5:1. And that then corrected, particularly in the 2000s. Post-Lehman, it came to maybe 2.5, 2.6:1. And now virtually no debt. So you have a situation which is in a way appropriate, or has created a foundation for the leapfrogging. So movement in technology, clean balance sheets, ability to invest, ability to grow. And then you look at the other side, who will consume? The consumer, if my belief is, if you're growing at the numbers that are required to double in the 9 years that you mentioned, then the consumer becomes aspirational, and the consumer is ready. Again, if you want to look at, as this happened earlier, the period 2000 to 2005, 2008 was a similar period. The consequence of the opening up and steps taken in the late 90s. And let's put it this way, the white-collar revolution that happened, led by the technology companies, created a demand pull, as it were. And corporate India, which was then restructured, was able to meet the demand. Again, corporate India, as I said, clean. And today, the aspirational rush is created by all sectors. It is not just one sector. And I think even as we speak, there are more sectors being added day by day. Who would have believed that just in the last 6 months on the services export front, we have a positive. And that number, as I believe, is set to increase. And again, creates opportunities, creates aspirations and so on. So there's a virtuous cycle that is in motion.
You know, speaking of this virtuous cycle, let me address the first point that you spoke of, and that is what we've seen as far as data consumption is concerned. You're absolutely right. We've seen data consumption go through the roof on the back of the fact that we've got the lowest prices for data anywhere in the world. But specifically from a financial sector perspective, while it opens up opportunities, it also means significant challenges, especially for the incumbents. We just had Mr. Kotak here, and he said that is the one thing that he's most paranoid about, and he believes that that is the one thing that the sector needs to be most paranoid about as well. You cannot continue to believe that you enjoy the regulatory moat because technology is going to be the big disruptor. How do you see that playing out? How worried would you be for incumbents at this point in time?
I would be terribly worried. If you look back again 20 years, there have been maybe 3 inflection points in technology as far as everyone, but particularly banks are concerned. In India, it was the late 90s when we could not afford a mainframe, so we migrated to smaller boxes, maybe a Sun box and an IBM box. And then we brought in technology into everything that we did. Thereafter came the cloud. And thereafter, you had what I would call cloud native applications rather than something that was retrofitted to the cloud. Today, with the open source, a whole new equation has been opened up. And to verify this or to validate this, all you need to look at is the 1,000 or so fintech startups that are out there and the work that they have done with open source. It is tremendous. And if any bank really understands what work these kids have done out there, they will not go to sleep, I can tell you this. Because I have tried to understand, sit with them and see what they have done. No banker should be able to sleep. So it is the sort of work they have done at the sort of cost point that are there. So I jokingly tell people today, a banker should ask 2 questions. Or somebody else will resolve these questions and proceed. Fit hai kya? Is it fit for purpose? Fit for purpose. And most of these things that have been done, yes, it is. Then free mein hai kya? So if it is fit and if it is free, then you are not able to compete unless you adopt the same mindset. So that's why I say that banks will have to relive what they are doing and relook at what they are doing. The good news is that there are several solution providers who are now almost ready with solutions for banks, which more or less meet this criteria. So and retrofitting is not as difficult as was thought. So somebody would have the courage to take the first step. So we'll see who will take that first step.
Speaking of the courage to take the next step, and you said fit hai and free hai. Perhaps on the fit, banks will be able to find the solutions, whether in-house or inorganically, by co-opting some of the fintechs onto their own platforms. But can banks really be able to do it for free, as we've seen in the case of VC-funded fintechs? And what will that then mean as far as the margins for banks are concerned? Many CEOs in this room would want to know your point of view.
I'm sure there are fintechs out here. They will say that actually, if you look at their costs, they're not that high. The technology cost is not very high, particularly with open source. And even from the time that fintech started disrupting the last 3-4 years, things have evolved now. There are vendors who are able to provide you a complete banking platform as a SAS model. So pay per customer at the end of the year sort of model, where you don't have anything else that you had all this time. And I won't say what all that is. The hardware, the people, the software, all those things basically can be swept aside, as it were, and you could put something new. So it's a dramatic tomorrow. And all I'll say is that no bank, no financial sector player, why only a bank, can afford to not be in this space today. That is, embrace the new. The digital startups, the fintechs have already done this. Their problem is a slightly different problem. So when you talk of technology, I don't think I would like to talk about it, because they have excelled in technology. And that is what I think the incumbent players ought to look at. That is the sort of disruption that has been wrought, and try to see how could I do that as long as the technology is fit and it is free, free meaning virtually free, not really you don't pay anything, you will have to pay appropriate charge for this.
Okay. That's as far as technology is concerned. But since you talked about the aspirational India and you talked about meeting the needs of this aspirational India with the hope of being able to double the economy, what about the appetite of the banking sector? What would you like to see change there? What kind of evolution will we now have to see? Where are we in that next leg of evolution to be able to meet the financing needs of the kind that we're speaking of?
There are two or three opportunities here and two or three challenges, Shereen. The first is, we need long-term funding, particularly for infrastructure. The banks will have to think deep on this because you cannot really assume that term transformation will always work. And the banks typically are with the, 1 year tenor, 1.5 year tenor, depending on the bank, is their maturity profile of deposits. So you can't lend, let's say, 5, 7.5, 10-year money, even though you reset the interest rate. Somewhere you will end up running an interest rate risk. So banks will moderate their lending to long infrastructure projects. The good news is you have got other savings modes that are coming up. So whether it's through pension, insurance, et al., which are, their needs are for longer term assets. So an infrastructure company could actually issue longer dated products, and that would be something that would be picked up by insurance and pension funds. So I think a virtual cycle can be built as we go along. Then when you look at the banks have an important role. Banks would clearly fund what we call, in our project financing days, the shorter term needs of not the short term working capital needs, but the initial 2-3 year need. Yes, you need to have skills in terms of analyzing and assessing implementation risk, but this is something which matches the tenor of funds they have. Probably could be a higher priced instrument, so they make money, allowing for risk that could be there. And later on, sell down could happen, and this could go to people who have longer appetites. A few years back, we used to talk of this, that is originate and sell down. Could not happen because there was no counterparty on the longer end. Now there is a counterparty, the bunch of insurance and other players who need longer assets. So I think it's a right time to get this big push on infrastructure.